Well, good day, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, the 25th of May. I got my dates right. And it is 2023, time 5:40 p.m. Central Time. So let's understand what you've been doing. For this whole week, you've been trading the debt ceiling. That's the reality of what went on. Today's crazy rally, and it's nothing short of crazy, and then NASDAQ and partly the S&P, it was due to the fact that NVIDIA, the chip maker, soared dramatically. We are talking a stock that went up from the low 300s to nearly $380. So about a $75 gain, added about approximately 200 million in market cap today. One of the biggest gains, might have been the biggest, I didn't check the record book, since Apple. And that's powerful. It proves that you can monetize AI. Now, AI's it's in such an infancy stage. You're going to see regulation galore. They're not going to leave this unchecked. The government's going to wrap its arms around it, what you can do, not do. They got to weed out the bad guys because there's going to be plenty of them in it. It's going to be stories, horror stories. I promise you, the people went in there, they asked a question, they go by what the gospel is on that, and there's going to be problems. And there will be companies that exploit that. You know that, I know that. Then we get to the debt ceiling. So today on the debt ceiling, it appears that they are getting closer. They've knocked off some of the checklist items. I understand that first defense spending, there's been a give by the Republicans. There's something on the cap that the Democrats have been giving up on. Discretionary spending is being worked out where it goes in a different way and it falls in a different category. This is what you call, remember what I said, there's mirrors. It's a house of mirrors that they'll come out with. I don't know what the final package looks like, and nor do you. Nor do you or I know if it's going to pass muster in either the House or the Senate. You can't know it, you can't guess until you see what it is, all right? And and that becomes the problem. Which congressman or senator wants to put together a coalition to push America into default? Okay, I'm sure that some of Trump's allies might consider that, but most people won't want to do that. So it's a very interesting time, and whatever they do, it probably gets passed, and that takes you right into the all-important jobs report, and then it's going to take you into CPI. Now, if you looked at today's employment claims, I don't care how you look at them, they're strong as can be in the sense they keep dropping, not going up. People have jobs. Then if you saw the first quarter GDP revision, and remember, we have another month to finish up this quarter, so we're almost 2/3 done with the second quarter, and we get the last revision of the first, but it improved. Now, you see this right here? Just wanted to let you know. We have our Memorial Day sale. So before you leave me at the end, give me a chance to talk to you about it and explain how that's all going to work. So let's go to the gold. For my money, this is where I think the market's going to start holding. Just picking a number. Often you have a market that goes up and it pulls back into the zone of the 18-day average or weekly average, and it finds its footing. This is the chart of closes on a weekly basis, 1939.60. You hit 1939. It's already found some of its footing there. That's all I'd be looking for. So if you were betting against the market, this is where I think the pros come out of those bets. On the daily charts, the trend is certainly down. How could it not be down? Because of the debt ceiling, you are adding every day practically some yield to the interest rate. So it's going up 5 or 10 basis points a day, but it's going up. That gives the dollar more strength because everybody's panicking around the world. You're now not into a safe area. You got to say, if my currency gets weak, what do I want to own? Well, it's the dollar, the strongest economy. Those two headwinds are not gold's friend. But once you get done with this debt ceiling, and you then can start looking at what the Fed's going to do. Whether the Fed goes up 25 more basis points or pauses doesn't matter. You're beyond this, and you probably get a pop. That's the way I'm looking at it. When I look at the gold swing line, I have a higher high and a lower low. It broke the downtrend and it made a new low. I've seen that. That's not a surprise. Where's the market trying to hold? Well, it went through the first challenge of the 100-day average. That's the green number. Where's the Bollinger Band? Right there. This combination of those two, I'll let somebody else want to play the short side. I wish them the best. Maybe you go to 1862, another $80. To do that, in order for that to occur, in my opinion, you have to have no deal on the debt ceiling. We default, and the market goes down there. That's my guess what it would take to do it. Can it happen? Absolutely. Do I expect it? Of course not. But that doesn't mean I'm right on that. When I look at the momentum, are we embedded? So now I start trying to time things. Both numbers, you can't go tonight on Friday because we're in Friday trade, are under 20. But I can go back to Thursday, and both numbers were under 20. Both on Wednesday were under 20. The day before on Tuesday were under 20, and the day before. So we've come in with an embedded reading that's 4 days old. That's good. Does it not mean that the pros, and I'll come back here, are not selling the rally? No, I think they're selling the rally. And I think they took some money off the table today. You had a big rally yesterday. Today, they got paid for that. And I think they took money off the table. I think they're out of their shorts when and if the remaining shorts, you don't come out of everything if you've taken my Bollinger Band course, when the red line closes over 21. Could you give back a chunk if that happened and we woke up in the morning, there's a debt ceiling deal? Of course. But that's when you get stretched out, you expect that. Otherwise, you trade ultra small or you don't trade it at all. You can see the silver and the copper just are not able to withstand the pressure of China being weaker, of the U.S. economy doing what it is over the debt ceiling, raising the value of the dollar and interest rates. It's too much for silver and copper to overcome. Down. If you break any further, I'd look for big support, 22.32 to 22.27. Support doesn't mean I'm telling you to go long, but I would be saying you got to cover shorts. That would be how I teach trading. Get this red line to close over 21. You can't be short anymore. Copper hit its numbers, so I think traders should have already taken some money off the table. Are we embedded? Let's take a look. You can't count Friday because we don't know where it'll finish. But both numbers were under 20. Both numbers under 20, both under 20 on Tuesday, and the day before, both under 20. In fact, you've been that way since what day? Monday. Therefore, the market does, in my opinion, have willing sellers on these rallies. No surprise to me as it's going to come in on it. You can see the bounces, and they keep coming out here. Again, when we hear there's a deal, and eventually there'll be a debt ceiling deal, you probably get a reversal of a lot of this, and it could get nasty. But you had your signal when the 18-day average got under the 200 and the market stayed down. In the platinum market, now I don't want, for my money, you're not embedded. You hit now the combination of the 100-day and the Bollinger Band. As I said yesterday, today you just went a little further. It's okay. You own it. I don't want to own the short side of the market. In the palladium market, you're getting down to nitty-gritty time. Can you make it down here? Don't give back too much. You're coming into the support zone there. And in the dollar, it's fully embedded. It doesn't break enough to let you in. If you look, each day it's making a higher high. So if you didn't get in the market early on, you didn't catch this trade, please don't reach for it. I know you're tempted to, and you'll tell me, Ira, it's going to 105, and it might. I'm not saying that. It's another 83 points away, but the risk factor's all the way back here in one swoop in a 48-hour period. Just be careful, because you're going to get the pop of the bubble when this all happens. Now, I don't know what the debt ceiling does. I just know what I expect the reaction to initially be on a corrective mode. Got it? And I'll be talking about that, and I'd like you to join me doing that in my daily research. You know, I write research twice a day, 2 daily written reports that come out Monday through Thursday, and sometimes special reports in writing. that ties together with my morning video. So the people that get my full research get 3 trade updates a day from me. And I use those times. The morning subscriber videos, and a lot of people just subscribe to that. They just want to see it once during the day. Terrific. They don't get the other 2 updates and the written commentary, and I think you're better off with that. But the sale involves our free courses, the full charting course, over a $400 value, the Bollinger Band course, which I think you want to take in a big way, while it sells for $120 with the charting I throw in, and you always get with it, I'll give you a couple of weeks, if you buy the full package of my research for futures, for example, I'm going to throw in the ETF. If you buy the ETF, I'll throw in the full future. So I give you that sample as well so that you can see it. You have to buy a year up front. I think you'll enjoy it to begin with, and if you think about it, it's such little money. How do you get it? It's simple. Move your cursor to the top up here. You'll see the icon, give it a click, it'll take you right where you have to go. I've sent emails out, we're getting good response right now, so I hope you keep up with that. I'm Ira Epstein, you have a great day, and I'll see you all tomorrow.